And we are live. Yay! Hey, Rich is here. How's it going, Rich? Just getting started. This is James from Dividend Stock Talk. Brought to you by, hey, Mike, how's it going? Brought to you, Riri. Brought to you by the 10-Minute Trader. Pakaris is here. Cool beans. Now, 10-Minute Trader. Oh, wow. I'm at a loss. Look at all these guys wanting to say hi. Hi, hi. Hey there. Hey, Pakaris, how's it going? Brandon's here. Way to go, Mr. Brandon. All right, Shannon, Alexander. Our cool Luke. Oh, our cool Luke. It's like Cool Hand Luke. What we have here is a failure to communicate. Yeah, that right, Luke? All right, so that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, taking you along for the ride for a safe, predictable, and consistent 1% per week. How am I doing this? Well, basically I'm using dividend stocks, blue chip stocks. You can call them blue chip stocks because they are the cream of the crop. Now, what am I looking at? I'm looking at the Dividend Kings, okay? 54 companies that have increased their dividends to their shareholders for more than 5 decades. That's 50 years of increased dividends. Year after year, higher and higher dividends. Botox Docs. Hello, everybody. Jennifer. Jennifer, how are you tonight? All right. That being said, we got the Dividend Kings, 50 years of increased dividends. We got the Dividend Aristocrats, 25 years of increased dividends. The Dividend Champions, again, 25 years of increased dividends. A little bit different rules than the Dividend Aristocrats, but still 25 years of increased dividends. And then we have the Dividend Contenders, 10 years to 24 years of increased dividends consistently, year after year after year. Little baby, what's happening? All right. All that being said, we're looking at quality dividend stocks. A Sala. Mom. Mom? No, I don't think I'm your mom, but okay. You wait, little baby. Alrighty. Your residence. Hey, Hakuna is here. Hakuna is here already this evening. Way to go. Geraldo. ¿Qué pasa, amigo? So, dividend stocks only. Okay? Preferably those dividend stocks that have increased their payments to their shareholders for more than 20 consecutive years. Well, 20 consecutive years, it means over and over again, higher and higher dividends. Bob, how's it going? Hey, James, could you look at AA tonight? That's Alcoa. Of course we will. Take a look at Alcoa. We'll jump. Calvin Hill. How's it going there, Calvin Hill? Come on down. You're the next contestant on the Price is Right. Alcoa. All right, we'll take a look at Alcoa first thing this evening. Now, Alcoa is one of those companies that's been in business for quite a while. Simba, you want to take a look at MPW. Let me just write that down. MPW. MPW. All right, we'll take a look at that in a little bit. But right now, we're going to take a quick look at Alcoa. Now, Alcoa has been in business for over 100 years. Again, a dividend king. Why is it not on your roster? Why are you not looking at Alcoa? Now, I'm not telling you to buy it. I'm just saying they've been around for quite a while. There should be no reason whatsoever why you do not invest in Alcoa. But let's take a look at the numbers and let's take a look at everything else that goes along with it. Fabiola Guzman, how are you? Johnny, how's it going? Garrett, NVDY. NVDY. I have a sneaky suspicion it has something to do with NVIDIA. I have a sneaky suspicion I'm probably going to say no to it. But we're going to take a look at it anyway. Just so you know that I'm not ignoring what you're asking me to take a look at. It does. It figures. Ace, what's happening? All right, Garrett, we're going to get to that in a little bit. I have a couple other stocks ahead of you, so we'll get to it. Right now, we're looking at Alcoa. Okay, Alcoa AA. First thing I always want to see anytime I look at a stock is the high, the low, where it was, where it is, and the direction it is going. Okay, that's the first thing I always want to look at. The chart. The chart is going to tell us exactly what it does. No rush, thank you. Who are you? Ace. Ace, how are you over there? Okay, I'm signing in like I do every night, and you're over here asking me who I am. Well, I could be asking you the same question. What's your name? Well, my name is smack dab on the middle of the website that you just signed on. The name is James. You can just call me James. That works for me. All right, Hakuna. Let's take a look at AA. First thing I always want to see anytime I do anything is what am I going to be paying for it? $30.60 is the current price. So if I want to buy it first thing Monday morning, $30.60. The closest strike price to $30.60 is going to be $30.50. Now remember, two separate entities. The stock is up there, the top. Down here is the option price. You look like Cobra Kai. Why, thank you very much. I actually know who Cobra Kai is. Calvin Hill, what's up, James? Pleasure to see you there, Mr. Calvin. Okay, so if I'm buying it at $30.60, I'm selling somebody the rights to buy it from me at $30.50, I'm losing 10 cents. Are you a hacker? No, I'm not, but thank you anyway. I'm not quite sure how to take that. All right, so the $30.50 strike price is going for 79 cents a share. All right, well, 79 cents a share is over 2%. So if you're looking for a decent company to play with, well, why not 2%? 2%, I already have it written down for tomorrow, for Monday. Simone, how are you? Just in time for taking a look at AA, which is not Alcoholics Anonymous, okay? It is Alcoa. Alcoa has been in business for over 100 years. So if I'm buying it first thing Monday at $30.60, I'm selling it for $30.50, I'm collecting $79, that's over 2%. What's next? Well, what's next? Nashville. How has becoming wealthy changed you? You know what? Becoming wealthy made me an arrogant asshole. It did. Okay? It wasn't until I lost everything that you make the realization that people are in your life just because you have money. When I lost all the money, like, everyone disappeared except for my real friends and my family because they were always around. But now that I got, halfway decent back again, you get to realize who's who. All right, Ace, you're saying please, please. What are we saying please for? You have to be more specific in what you're asking because PLS means please, so I have no idea what you're asking. So let's continue with Alcoa. Now, once we figured out the numbers worked, the high, the low, where it wasn't, all that kind of nice stuff is adequate for me to take a look at it deeper because I want to see right here. I want to see what's going on right there because right there is the past week. Happy Friday, Apex. Is today Friday? No. Today's Saturday. Is today Saturday or is today Friday? That's not funny. No, today's Saturday. Okay. Yeah, one person said happy Saturday and one person said happy Friday. Oh, is it me? No audio. No audio. No audio. Is anyone else having issues with audio? And can someone please go check YouTube and see if this screen is live on YouTube and if it's working okay. KB, how you doing? All right, so let's take a closer look at the charts so we have an idea of where we think it might be going in the next 3 to 5 days. Because if you're new here, I like to jump in on a Monday and I like to be out on a Friday. I like weekly cash flow every single week. So there's certain criteria in the stock that I'm looking at that I require. Number one is to make sure the company has increased their dividends to their shareholders. That's a shortcut in telling me the company is profitable. I think each dividend end is next week too. All right, Bob, cool. Picaris, nope, was me. All right. So, if the company is consistently profitable year after year after year, well, then they increase their dividends because in the grand scheme of a corporation, one of the major things on the list of things to do is keep the shareholders happy. Okay? Keeping the shareholders happy is really not that difficult if you continuously keep the dividends the same or increase, preferably increase. But the EX dividend is on the 12th. You still get the dividend if you buy it Monday. Well, let's take a look. We're looking at Alcoa, right? That's August. No, we want to go to July because we're still in July. Oh, yeah, we are in August on the 12th. Okay, and it's only 10 cents. It's not that huge of a deal. Okay, but alrighty. But here's the thing. Do I want the dividend or do I want the premium? The dividend's only 10 cents, but look at the size of the premium. The premium is 79 cents. Well, that's 7 times better than the dividend itself. So why would I want to buy the stock, hold on to it, if they're only giving me 10 cents every 90 days? That's 40 cents for the year. One option trade, okay, if I buy it and sell it and I get this right here, that's better than the premiums or the dividends. You look like a ninja. Oh my goodness, Ace, come on, please do me a favor. Come up with some good questions. All right, so Alcoa, I like it. Let's take a look at the chart. A year ago, Alcoa was sitting at 33.49, bottomed out the end of October of last year, 22.98. Topped off with a double high at 45.43, and that was the end of May. Okay, now, since the end of May, she dropped, a little bit of retrace, dropped, and here's our 30-day bottom right here last Monday. So we have 1, 2, 3, 4 days to the upside after that Monday. Do all stocks pay dividend? Who was that question? Ace Lucas, no, all stocks do not pay dividends. There's 9,598 companies you can invest in on Monday morning. Which one are you going to pick? Well, half of them pay dividends, which means they share their profits with the investors. That's you and me. Once we start buying the stocks, we become investors. And if they continue to increase their dividends to us, well, great. But if they decrease, well, that means they're not making as much money. See, the way the corporation works is, well, they do their business, and that's basically what it is. I'm 7. You're 7 years old. What the heck? What are you doing online at 7 years old watching me? That's totally wrong. Wrong and all kinds. You gotta get your mom or dad and set you straight. Yeah, I get that. All right. All right, so that being said, all right, we're looking to get a consistent profit. Well, if we get a consistent profit, well, how are we going to do that? There's several ways of doing it. Okay, you can sit in front of your computer and look for certain setups to jump in and jump out. Well, that's one way of doing it. Another way of doing it is listening to the talking heads. Are they right? Well, most of the time I ignore them. I never listen to a word they say. Because once they say something, well, a couple million people already heard it. What's the point? Okay, so with that being said, what are we looking at now? Oh, okay, so if a company consistently increases their dividends, it means they're consistently sharing their profits with their investors, which means, hypothetically speaking, they're continuously profitable year after year after year. Now, you're going to find throughout the night that people are going to throw up a lot of these stocks. Some of them are going to be questionable for this type of trading strategy. Now, this trading strategy is supposed to be simple. Simple, safe, predictable, consistent, and no way to lose. That's how it was implemented, how it was created, because I made it specifically for my 9-year-old daughter. It had to be simple. She was 9. She didn't understand all this stuff. Safe. Safe meaning if she's going to buy something and she's going to make money, well, it's going to be as safe as possible. Like, there's no way for her to lose, which is kind of funny because it's kind of redundant. Because rule number 5 is safe deal. Okay, wait. Simple, safe, predictable, consistent, and no way to lose. That being said, the 5 rules are very important. Rule number 1, never buy something you do not understand. Okay, if you don't want to own it long term, don't buy it. Never sell at a loss. Rule 2. Rule 3, make sure the company has plenty of increased dividends. Well, that means they're continuously profitable because in the grand scheme of business, they want to run a business successfully. To do that, they need to be profitable because that's the reason they're getting into business in the first place. Now, with the companies that actually pay dividends, because remember, half of them don't pay, half of them do. I want to make sure, excuse me, I want to make sure that they are continuously profitable. For them to be continuously profitable, they have to increase their dividends every single year, year after year after year, at least 20, that's 2 decades, 20 consecutive years. Okay, so that brings us up to where we are now. Just because the pricing is right, and just because they increase their dividends every single year, it doesn't mean it's the right time to buy. So what are we looking for? Well, we're looking at the chart because stocks go up, stocks go down, stocks go up, stocks go down. That's all they do. So when the stock comes down, like it did in the past couple of weeks, Alcoa bottomed out here on the 5th of August, which was Monday. That was the 30-day bottom. So what usually happens after a 30-day bottom? Well, you got investors like me saying, wait a second, the 30-day top was at 46. Now we're down to 28. Okay, from 28 to 46, that's, math in my head, $18. That's an $18 drop. That's huge. From a $46 stock down to 28, that's a big drop. All right? So, you got people like me. When a good company, especially one that's over 100 years old and consistently increasing their dividends for over 5 decades, they lose 28 or 18%, sorry, $18, which is, I don't know, what was that, 40% drop? Something like that? 40% drop? Well, yeah, there's going to be retracement. There's going to be buying because the company's kind of on the low side now. Well, great. Well, there's your 30-day bottom right there. You have 1, 2, 3, 4 days to the upside. Well, we have isolated the 30-day bottom. Okay? So, yeah, 30-day top 30 days ago, 30-day bottom on Monday, 4 days to the upside. What are you waiting for? Okay, let's take a look at seasonality. What does this stock normally do this time of year? Well, this time of year, this stock has a tendency, oh, look at that, to go down. Look at that. To go down, settle up right around the middle of the month, and then shoot back up again. Well, it's an interesting question. Now, of course, seasonality has a lot to do with historical performance, and it's not guaranteed. Just because it did it last year doesn't mean it's going to do it again this year. And more times than not, here's the last 30 days. More times than not, the current trend supersedes seasonality. Now, just because a company usually goes down this time of year, but right now they're in an upward trend. Okay, 5 days, 4 days to the upside. So is that going to continue? Well, we all know that I just want to jump in, grab that 1%, jump on out, say thank you very much, have a lovely day. But it is what it is. So I have it written down. Let's take some more questions. ACO. Many stocks drop when they EX dividend. You're absolutely correct. That is on the dividend date. So let's take a look. Okay, so these are all the companies here, all these little green dots. See all these little green dots? They all represent a company that is going to be paying out a dividend. So, for the 12th, there are 45 companies. So tomorrow, there are 45 companies paying a dividend. So let's go over a few of them. Ooh, check it out. You got Alcoa, Apple, ALX, I have no idea who that is. Aero, okay, I have no idea who those are. Ooh, ConocoPhillips, Capital One Finance. What else? Grow, GS, That's all I recognize. Okay, that's all I recognize. But look at them all. AA, which is Alcoa, AAPO, which is Apple, ALX, I have no idea who they are. ARO, AROW, ASTE, BRY, BWFG, all these companies here are paying out a dividend or have their EX date on Monday. So any one of them is a possibility. Let's go back down here. Here we go. So that being said, let's move on to the next one. So next on our list, how many stocks? Yes, they do. Picaris, do you ever get the dividend if the option gets exercised? Well, that would depend. If the option gets exercised before the EX date, whoever owns the stock on the date of record, remember the EX date is the last day the stock trades. Okay, is the last day the stock trades. But then, okay, what the hell was I? Shit. Okay, the EX date is the last day the stock trades. The very next day is the date of record. Whoever owns the stock on the date of record is entitled to the dividend. There we go. Oops, it's a little off. I'm gonna have to fix that camera. That was a little crooked. Alright, that being said, let's move on over to the next one. Alright, next one on our list. Sheila, how are you today? Alma, sell-off done? To the moon again? Alma, I have no idea what you're talking about. Alright, Prince Multani, can you please explain exactly how pulling profits from dividends? Well, that's an interesting question. I'm not quite sure I understand what you mean by that. Pulling profits from dividends. Well, let me just briefly explain what I'm doing here, okay? Because you're relatively new. I've never seen your name here before. Now, there's over 9,598 stocks, okay? Companies that you can invest in any single day, Monday through Friday, 9:30 to 4 p.m. All right, Eastern Standard Time. So you have over close to 9,600 companies to choose from. Out of all those companies, you're going to divide them in half. Half of them are going to pay a dividend, which is a portion of the company's profits they pass along to the investors. That's you and me. When we buy and sell the stocks, we become the shareholders, we become the investors. We are entitled to a portion of the profits. Or the other half of the 9,600 companies, they take all those profits and put them back into the company for capital growth so that the stock price goes higher and higher and higher. If that's what you're looking for, you're in the wrong place. That's not what I'm here for. I'm here for a safe, consistent, predictable 1% per week. So I'm looking for cash flow. I'm not looking for cash accumulation. There's a difference between the two. So if I buy a stock for 10 bucks and it jumps up to 20 bucks or 30 bucks, well, that's cash accumulation. That's capital appreciation. That's what that is. That's not what I'm looking for. That's not what I'm teaching here. What I'm teaching here is safe, predictable, consistent 1% per week, and that is cash flow. Now, 50% per year is about 1% per week. Now, that being said, once you've isolated what stocks you want to look at, now when I say there's over 9,600 companies to choose from, well, half of them pay dividend, half of them don't. Well, half of 9,600 is still over 4,800 companies to choose from that pay dividends. So how do you figure out which ones to buy or which ones to invest in, however you want to look at it? Now, me particularly, okay, you can figure out whatever you want. You have to put whatever companies you like into your portfolio. Great. Well, in my portfolio, the only companies that are there are those companies that have increased their dividend payments to the shareholders for 20 years or more. Now, out of the 4,800 companies left that do pay dividends, well, only about 300 fit that criteria. So I'm only looking at 300 companies. Let me read you a few of them, and see if you know who they are. I'm looking in the wrong chart. Oh, looking in the wrong place. Let me read a few of these, and you tell me which ones you never heard of. All right, you ready? American Express, Bristol Myers Squibb, Globe Life, MasterCard, Verizon, AbbVie, Procter & Gamble, Bank Mellon, Ally Bank, Aon Bank, DHI. Let's go take a look at another one. T-Mobile, Heinz, Heinz Kraft, Bank of America, General Motors, Occidental Petroleum, Hewlett Packard, Boyd Gaming, Coca-Cola, Paramount, Mendelez, U.S. Bank, American Express. We already did that one. But those are some of the companies I invest in. Only good quality companies. You probably heard of every single one of those. Well, if each one of those is consistently increasing their dividends, which means they're consistently profitable, then why wouldn't I? Okay, look at this right here. Kraft Heinz, they've been in business for over 100 years. General Motors, in business for over 100 years. Bank of America, in business for over 100 years. Coca-Cola, over 100 years. These companies have longevity, historical performance. Why would you put your money into anything other than a profitable, successful company? So when I am doing that, I'm looking at just those particular companies. Well, great. Here they are on the list. Okay, and this is a calendar. Okay, January, February, March, so on and so forth. So the calendar tells me what companies are paying when. That's when I want to look at them. Because you see the little green dot? The green dot represents when they're paying their dividend. And when they're paying their dividend, the stock has a tendency to go up in value. So if I'm looking at U.S. Bank on the 28th, well, I want to buy it on the 10th, which is 2 weeks before that date, on a Monday. That gives an opportunity for the stock have 2 weeks to go up, for me to jump in, grab my profit, get out, say thank you very much, I'll see you again in 90 days. Why do I say see you again in 90 days? Well, this is here now, USB on the 28th. 90 days from this date right here, it will be there again. So when you're looking at a calendar, you got January, February, March. Well, that's the first quarter. April, May, June, that's the second quarter. July, August, September, that's the third quarter. October, November, December, that's the fourth quarter. Okay, the first week in the first quarter looks exactly the same as the first week in the third quarter, which looks exactly the same as the first week in the second quarter and the fourth quarter. Every single stock you see on my list will repeat every 90 days. So I'm looking at Hewlett Packard every 90 days. I'm looking at Paramount, Occidental Petroleum every 90 days. Okay? What am I looking for? Well, I look at the chart. Where's the high? Where's the low? Where was it? Where is it? Where is it going? And then I want to jump in and take a look at the last 30 to 90 days. Well, look at this. Your 30-day high is here. Your 30-day bottom's here. 1, 2, 3, 4 days to the upside. Well, yeah, here's the bottom. Now she's starting to move up. That's what I'm looking for. So when I say pulling profits from dividends, it's not actually the dividend itself. Because if you look at some of the dividends, look, Occidental Petroleum, the dividend's 22 cents. Paramount, the dividend is 5 cents. Heinz Ketchup, it's 40 cents. Coca-Cola, it's 48. Boyd Gaming, it's 17. Okay, do I really want the dividends? No, I don't. What I would prefer to have is this right here. Right now the price is $15.58. The 15.50s are, I don't even know what the hell they're going for, because it doesn't say. Oh, that's weird. Single order must have a positive limit price. All right. Well, let's find another one. JPW. Maybe JPM. Okay. 208, the 210s are going for 80 cents. That's not quite what I'm looking for. That was a terrible example. Okay, Microsoft. Right now, Microsoft's at 406. The 407 is going for $4.35. Well, that's a heck of a lot higher than the dividend. So if I'm going to buy the stock at 406, sell it at 407, well, I'm going to collect an extra dollar or whatever it's going to be, plus the premium. That's a heck of a lot more than the dividend. So I'm not looking for the dividend itself. The dividend tells me when to buy. Okay, I look at the calendar. What's today's date? Okay, what's 2 weeks from now? Those are the ones I want to look at. The only ones I want to look at. That's June, July, August. Okay, so if we take a look. Okay, these companies, most of these companies are over 100 years old. You got Kinder Morgan, Ford, British Petroleum. Well, some of them aren't. Wells Fargo, Visa, ExxonMobil, Kroger, Clorox. Most of those companies have a longevity to. Oh, I got 30 questions I'm missing. You own the stock, you pay. They pay you a simple, okay. Erica, JKS. JKS. Why does that sound totally unfamiliar? Well, here's one of the reasons. It's a monthly option stock. What does that mean? That means that you can only have an option trade once per month. Well, once per month comes to 12 times a year. So I got a simple question for you, Erica. Okay? Now, would you prefer 12 checks by one per month, or would you prefer 52 one per week? Okay, it's a pretty simple question. I like once per week because the numbers just work better. Wildcat Sam, how are you today? D-Money, what do you think of the aristocrat strategy? All right, D-Money, you have to give me a little bit more specific there because I'm not quite sure what you mean by that. Falcons, what are you looking at for Monday morning? Zachary, how are you doing? Prince Multaney, about 2000 Ford sold 20 calls and they got assigned. So how are you doing it? Well, basically, I'm doing the exact same thing, okay? So if I buy Ford, which I did, I bought Ford, I sold a covered call against it. Some of them got called away, some of them didn't. Okay, I'll just take the stocks I keep, take them into next week, do the exact same thing over and over again, week after week. D-Money, what stock are we talking about? Well, we were just talking about JKS, which is going to be a no, because JKS is a monthly optionable stock, which means I can only do it 12 times a year. 12 times a year, the numbers just don't add up, and I just don't like them. They're very clunky, hard to work with. I mean, if you like the company, why not? I mean, look, high over there, 38. Now she's down at 19. She's bouncing off of this. She lost 50% of her value. Well, it's a good time to jump in. Look, the bottom was right there below 18. Now it's at 1950. Okay, does that tell you the bottom's there? And now she's going up? Great. But it's not on my list because I don't like monthlies. So if I buy it, I can do it once every 30 days. And once every 30 days doesn't work for me. I like once a week because once a week gives me a higher rate of return and a higher probability of safety. Because, my humble opinion, here's where it was Monday. Well, 30 days ago Monday, well, it was there. Okay, so how can you predict? It was there, now it's here. All right, so what did it do? It went down, it went up, it went down, it went up, it went down. Okay, what is it going to do in the next full week? Well, is it going to go up and down, up and down, up and down? Okay, 5 days is good enough for me. All right, keep looking, keep looking. All right, Bob, do you qualify for a dividend if you buy on the day of the EX dividend? Ooh, that's a good question. Now, see, years ago, actually last year, all right, we'll take a quick look at this. All right, take a look at the chart at the moment, at the calendar. Citigroup, the 5th. Announcement date 7/18/24. EX dividend date 8/5/24. Date of record 8/5/24. So the EX date and the dividend record date is the exact same day. Well, let's go back last year. Okay, see where it says right there? August 2024. So we're going to go back August 2023. Give it a second for it to populate. Come on. Yeah, here we go. Now, which one was I? Aflac. Okay. Now look at this. Announcement date 8/1. EX dividend date 8/22. Date of record 8/23. This year they changed the EX date and the date of record to be the exact same date. So if you buy it before the EX date, then you qualify for the dividend. Okay, if you buy it on the date, I honestly could not tell you with 100% certainty. Michael David Robinson, rugged update depends on how far you are needing to compare to the capital farmers. Okay. Duration of swing. It's always different. Don't be caught sleeping. The perfect storm is brewing. You're absolutely right, Calvin Hill. Have you done ratio spreads up or down in the past? Just want to ask you about something. Yeah, send me an email, Michael. I've done them in the past. I understand them. But as soon as you get into 100% options, I mean just options, you're changing the whole risk dynamics because options expire. Okay? So when you're doing a ratio spread, whatever, credit spread, debit spread, any kind of spread, calendar spread, yeah, you're involving 1, 2, or more options, not doing the stocks whatsoever. The nice thing about covered calls, you're buying the stocks. Stocks don't have an expiration date on them, okay? And then you can sell an option against a stock every single week. An option, when you buy an option, it has an expiration date. Therefore, it increases the risk. And when you increase the risk, then I'm not quite sure how you want it. It just increases the risk, and you have to figure out a way to live with that. I don't like risk. That's why I do what I do. Because stock price goes up and down, same as dividends. Not necessarily. Okay, Prince Multani, that's where you're incorrect. Okay, now I don't like telling people they're wrong, but let's take a quick gander at some dividends. Okay, now, when I say I only like companies that have consistently increased their dividends, right now we're going to take a look at Microsoft. Now, Microsoft has increased their dividends every single year, going all the way back to 2023. Now, watch the numbers closely. 8 cents, 9 cents, 10 cents, 11, 13, 16, 20, 23, 28, 31, 36, 39, 42, 46, 51, 56, 62, 68, 75, etc., etc. Now, let's show you another one. This is one that people really enjoy, okay, but I don't like it at all. Okay, now listen to these dividends. 12 cents, 14 cents, 21, 26, 20. It went backwards. 23, 25, 28, 27, 31, 30, 27, 30, 24, 33, 35, 36, 26, 41, 35, 42, 49, 47, 44, 60, 54, 52, 60, 70, 64, 70, 60. It keeps going up and down, up and down, up and down. There's no consistency there. So, Prince Mutani, right? Okay, Prince Mutani. See, dividends, depending on what company they are, they can go up and down, up and down. Those companies I don't invest in at all. I like companies that have consistently increased year after year after year. So, and only increase year after year. CLX, which is Clorox. Okay, let's go far back. All right, 87. 6 cents, 7, 8, 9, 10, 11, 12, 13, 15, 16, 18, 20, 21, 22, 27, 28, 29, 31, 40, 46, 50, 55, 60, 64, 71, 74, 77, 80, 84, 96, 106, 111, 116, 118, 120. No going down whatsoever. Always consistently going higher and higher and higher and higher. Now, when I say the only companies that I personally invest in are those, kind of like the two I showed you, where they consistently, year after year after year after year, consistently go higher and higher every year. Basically, that means they're consistently profitable because a portion of the profits is allocated to the investors. Yeah, I could sit there and read the quarterly reports, the annual reports, and be available for all the conference calls and read up all on all the news. Or I can just say the heck with all that crap and just look, hey, what are the dividends this year? Oh, they're higher than last year? Fine. They must be making more money. Because if you think about it, if you're making more money, well, you're dishing out more money to your investors. If you're not making as much money, well, you pay the investors a little bit less. Then the dividends go up and down, up and down. Yeah, I don't want those companies. I only want companies that continuously increase every single year. Okay, hopefully that explains it. Where do you receive the actual dividend payout? Well, Johnny, that depends on you because you're the one signing up the account. You're the one signing all the waivers, all the disclaimers, all that crap. Well, they're going to ask you when you sign up to your trading account, where do you want the dividends sent? You can have them sent to your house in a check. You can have them deposited into your checking account. You can have them deposited back into your trading account. You can actually have them converted into shares and have the shares sent to you in paper format. Okay, that is something you've got to figure out. Me, all my dividends go into my trading account, and my trading account has a debit card and a credit card attached to it. So anytime I need to buy something or spend something, well, the money's already there. Bodo Glint, how are you today? John, 300 companies for 24 years cash flow, 50% a year. When do you cash out? Well, John, that's an interesting question. And for that question, let's jump on over to here. Okay? Here is my web page that has all my social media in it. Okay, this is the 10-minute trader. Underneath that, you're going to see all my trading accounts. Okay? Now, all my trading accounts, I used to share 2 of them. Now I shared my 3rd one. Okay, each and every individual one will show you exactly week by week by week what I jumped into. Now, that being said, look over here. Week 21. Well, these are the stocks that I had. This is how much money I made, and this is how much money I've taken out on a weekly basis. Okay, now you may think I'm like everyone else and I let my profits accumulate and get bigger and bigger. No, I don't. I actually use those to pay my bills. Okay, so my little chunk of change that I have is set aside and I make 1% per week. That 1% per week pays all my bills. Okay, so my account doesn't increase. It may increase maybe 2, 3, 4, 5% per week. But, wait a minute, no. Sorry, hold on a second. I make 1% per week. So out of that 1% profit, a portion of that profit goes back into the account, so it grows a little bit. Not huge, but a little bit every week. So I take most of my profits out on a weekly basis because that's how I pay my bills. Hopefully that answers your question there, John. Fathom Foltz. How are you today? John, you got it? Way cool beans. What program are you using for the dividend calendar? Okay, John, the dividend calendar and all that information you see, okay, all this stuff here, okay, that is Thinkorswim. That's a trading platform. You can go to thinkorswim.com and download this onto your laptop or your desktop. Okay, I prefer not using the online version because the online version doesn't have as many perks. Now, this trading platform does belong to Charles Schwab. Not that Charles Schwab came up with it. Okay, Charles Schwab bought it from TD Ameritrade. TD Ameritrade bought it from Tom Sosnoff, who was the one who created it decades ago. All right, Tip and Ringman. Tip and Ringman, Verizon and AT&T. Well, let's take a look. AT&T. AT&T is going to be a no for this week. That was quick, wasn't it? Because remember, I told you the very first thing I want to see is where's the high, where's the low, where was it, where is it, what direction it's going. Well, currently, right here is the high. I want nothing whatsoever to do with the high, because you're going to make money in the you're going to make money in the stock market by buying low and selling high, not buying high and waiting for it to go higher. Yeah, I don't play that game. Okay, eventually, this is going to come down, because look at the charts. Seriously, look at it. It goes up, it came down. It went up, it came down. It went up, it came down. Up, down, 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 up, down. And now we're up here. Well, what do you think is going to come next? Well, it's going to come down. And when it does come down, that's where I want to see it. So let's zoom on in. Take a look at the last 30 days. Well, here we are. Your 30-day bottom right here. 30-day top right there. It pulled back. Now 1, 2, 3, 4. 4 days to the upside. Do you honestly think that between Monday and Friday it's going to continue to go up? Because you think about it, Monday, Tuesday, Wednesday, Thursday, Friday, that's another 5 days. Well, look what we have. 1, 2, 3, 4, 5. 5 more days will be 10 days to the upside. Okay? Let's take a look at history. Has this thing ever done 10 days in a row? Okay, here we go. 1, 2, 3, 4, 5, 6, 7, 8. 8 days in a row. Nope. 1, 2, 3, 4, 5. Nope. 1, 2, 3, 4, 5, 6. Nope. Okay, you go for the whole year. Whoop, here. But this is not straight up, though. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, so it did it back in January. But it not really, because look, right here. She came down, and then she went up, and then she came down again, and then she went up. What the heck am I looking at? All right, that's better. See? I'm looking for 10 green days in a row. Okay, 1, 2, 3, 4, 5, 6. Okay, 1, 2, 3, 4, 5, 6. Yeah, I don't see it anywhere. Not on the whole year. Has it gone up 10 days in a row? Okay, so you got 1, 2, 3, 4, 5 more days. I don't think it's going to do it. So that's AT&T. I'm not going to buy it, but if I was going to, I'd be paying $19.51. The 1950s are going for 20 cents. Well, 20 cents on a $19 stock, that is over 1%, and that's what we're looking for. So if I like AT&T at this current price, which, don't get me wrong, it's okay. I mean, the company's over 100 years old. They ain't going anywhere, and they're giving me 1%. But here's the thing. It's too close to the high for me. That's why it's a no. Okay, I would prefer for it to go up a couple more days, then come down, and then jump in. So as a matter of fact, I'm going to write down for the next 2 weeks to take a look at AT&T in 2 weeks. All right, so we're going to take a look at AT&T in 2 weeks from today. So hopefully, she'll be coming back down here. Then it'll be time to jump in about 2 weeks. All right, Verizon is next. Okay, now this one I like a little bit better. Okay, your high, your low, where was it, where is it, what direction it's going? Fine. Now let's take a look at the actual numbers. 40.78, the closest one's going to be the 41. That's 25 cents. I'm going to say sorry, but no, because it doesn't make 1%. Why would I buy it 40.78, sell it the 41s and we get 25 cents. Or what if I did the 40.50s? Well, it's getting 50 cents, but I'm losing 28 cents off the top. By the time you subtract it, it's just not, the money's not there for Verizon. Sorry, I like Verizon. It is on my list, but it's not a no, it's a not this week. So what does the chart actually look like for the last 30 days? Okay, that's pretty plain and easy to see, right? Okay, up, there's your 30-day high, drops down to your 30-day bottom, shoots up, got all this profit taking, gap down, the gap is already filled. We get 4 days to the upside, yeah, and there's plenty of room to go all the way to the top. So yeah, it's great to jump in, but you're not making your 1%. You're making what, 0.75 maybe? Or 0.65, something like that? All right, so tip and ring, man. Sorry, dude. Does the fees eat the profits? Well, that's all going to depend on where you do your trading. Because you got companies like Robinhood, Acorn, Webull that have zero commissions. Okay? Those, the fees aren't as much. Because you do have to pay platform fees, which really aren't that much. Let's take a look at one for a second. Let's hit this. Hit that. Okay, buying effect. It doesn't actually give me the fees on this one. Okay, so let's not do that one. Let's do this one here, do that one there, that one there, this one here. Okay, this one here, you see it? $6.50 fee to do this one trade. Okay, but buying just stocks, there is no fee. Dennis, how are you doing tonight? Dennis over there on Instagram. No, you must purchase 1 day prior to the EX date. Well, there you go. That was Gengar, Phantom. All right, John, those are the questions. Erica, you're welcome. Wildcat Sam, doing great. Hope you are too. Yep, Carlos. Whole stock Dell retail 2x profit. Okay, Carlos, I'm not 100% sure what you mean by that, but let's open up and take a look at Dell. Because believe it or not, I do have some Dell. Right here. Dell. Yep, I got 800 shares at 109. Okay, and currently Dell is at 92. Okay, so take a look at Dell. Currently right now, the current price if I want to buy Dell, $93.30. The 93s are going for $2.40. Now, if you're good with math, you know that is well over 2%. So I'm into it at, what is it, 109? Yeah, I'm going to be looking to sell the 100s again this week. Yeah, the 100s are going for 35. Maybe not. I might do the 97s. No. 98s, 99s. Yeah, I'll probably end up doing the 98s or the 99s. Let's see what the prices are. Now, I'm in it at 109. Okay, nothing I can do about that. Once you buy a stock, it doesn't matter which one it is, but once you buy, that is your entry fee, your entry price, your beginning point. I don't know what you want to call it, but that number will never change unless you do what is called dollar cost averaging. So if the current stock right now is at 93, my average price is 109. To dollar cost average, I would have to buy 800 shares at 93, and that would drop my price from 109 to right about 99. Okay, so right now it's at 103, 99, I'm at 109. So you go halfway in the middle. But you have to go share for share. If I bought only 400 shares, well, yeah, then it'll only bring me down to like 105. Okay, but if I buy a full 800, because I already own 800, I have 800 at 109. Okay, So in order to dollar cost average down properly, you buy the exact same amount, 800 more shares at 93.90, 93.30. And that'll bring me down to somewhere around 99 for dollar cost average. So Dell, I'm not quite sure what you meant by whole stock Dell retail 2x profit, easy math. Okay, Carlos, I'm not 100% sure what you mean by that. Because right now, at the current market price, 93.30, $93 is going for $2.40. That's well over 2%. And I actually like Dell because you got 2 days to the upside. So I'm going to write Dell down for tomorrow. Dell, and I'm going to circle it only because if you take a really close look at the chart, the last 30 days, right here we go. Last 30 days, check it out. 30 days ago was the 30-day high, way up top. You see it way up there? Way up top. 30-day high, 30-day bottom was on Wednesday. Thursday was higher, Friday was higher, 2 days the upside. That is my personal invitation. 30-day bottom, 2 days the upside, that's where I jump in. So first thing Monday, I will probably, more than likely, jump into Dell yet again. Because I like Dell. All right? And better yet, check this out. You got a gap down here, and a gap down there. Well, gaps have a tendency to fill. How long does it take? Well, this one right here shouldn't take that long at all. Okay? Matter of fact, this one right here should fill within the next couple of weeks. Well, great. That's what we're here for. We're here to look at opportunities. Now, I like opportunities with specifics. You know, certain companies that are consistently going a certain direction, paying out a dividend consistently. Good sir, I hope you're doing well. Yes, I am. I like the stock Dell, that is. Well, alrighty, Dennis, I'm glad you like the stock Dell. I like it too. I actually own some. So Monday morning, I'm probably going to buy some more. That being said, let's go a couple more questions. Oops, I jumped out, missed a few. Are tariffs inflationary? Wrong question. Where do you find that calendar? Erica, the calendar that I'm looking at, that I use, this calendar here, this is on Thinkorswim. Okay, one of the reasons why I like this trading platform, because it has everything I'm looking for. And I think that's probably how I created it, because I've been using this software, or this trading platform for the past 20 years. Okay, so I was using it 20 years ago, and it's still here, still doing all these cool things. One of the reasons why I like Thinkorswim. Justin's Everyday Trading Limited. Theta is a contract's enemy. Well, okay, but here's the thing. Once you say the word theta, then you're automatically opening up yourself to, what do you call that? Contradictory information. What do I mean by that? Well, theta is part of the Greeks. Part of the Greeks is part of the pricing methodology of the options. Well, how do you come up with the price for the options? Well, you have the Vega, the Delta, the Vega, the Rho, and what was the other one? Vega, Delta, Theta, Rho. I think there was a fifth one. But anyway, there's what's called the Black-Scholes pricing methods for options. Yeah, Theta is in there, Vega is in there, Delta is in there. So is the stock price, the time value, inflation, percentage rates. So much crap is in the pricing of an option. But what does it have to do with this strategy? The strategy, you're complicating it. Now, when I say you're complicating it, you don't need to complicate it. Okay, one of my major, one of the things you'll hear me say over and over again is don't make it more complicated than it needs to be. When I say it needs to be simple, safe, predictable, consistent, and no way to lose, well, that's pretty kind of like a no-brainer. Simple, safe, predictable, consistent, no way to lose. Okay, great. I love that. So once you start throwing in the delta, the vega, the theta, and the rho, it gets confusing. Okay, remember, it was created for a 9-year-old little girl. I'm not saying that she wasn't bright. I'm just saying that she was an average student. Okay, average student, nothing superb, nothing separated her from anyone. She was not a Mensa student. She was not in the honor roll. She was not in honors math. She wasn't. Simple. Okay, here we go. Simple. What's today's date? Well, today's date is the 10th. Okay, today's the 10th. Tomorrow's the 11th. Okay, these are the stocks that are up for consideration for next week. Let's go to a different chart. I mean, different set. Wow, that's the wrong one. Make it a little easier. There we go. A little easier. Okay, so when I say today's the 10th, tomorrow's the 11th, when I say keep it simple, simple, you ready? Simple? Okay, so if this is this week here, well, what am I looking at? Apple, Capital One Finance, Kroger, Heinrich and Payne, and Moody's. That's it. Am I looking at T-Mobile? No. Am I going to look at Johnson & Johnson? No. Am I going to look at CVS? No. Am I going to look at UPS? No. Am I going to look at anything other than these 5 companies? No. Simple is simple. So, first thing you do, you open up the calendar. All right, there it is right there. Those are the ones. Great. You go from there over to the trading area, and the very first thing you do, you put in Apple, AAPL. Great. So let's get rid of this. What the heck am I looking at? Get rid of that. Get rid of this. Change that. There we go. First thing I want to do, once I put the stock symbol in, hit enter. Then this is going to pop up. High, low, where was it? Where is it? What direction is it going? That's the first thing I want to see. If that's okay, then I go to the next phase. The next phase, simple enough. What am I paying for it? 216. Well, what's the 216 going for? 228. Awesome. That's over 1%. Great. Now, what do? Now I take a look at the chart. Well, a year ago, 178. Bottomed out the middle of April, 164.23. Topped out the 15th of July. What was that, 3 weeks ago? And that was 237.23. Well, what happened between the 30-day high is she drops, she gaps down. Okay, here's your 30-day bottom. 1, 2, 3, 4. 4 days to the upside. Look how much space between here and the previous 30-day high. Well, it's got a long way to go. It's giving me over 1%. It's got a long way to go. The 30-day bottom bouncing off of a 30-day top. What else could you ask for? Hold on. There's a little bit more. We jump in and take a look at seasonality. Now, what is seasonality? For those of you who don't know, or for those of you that are new here, this is called a seasonality chart. Over to the far left is January 1st. All the way to the far right is December 31st. The blue line represents the movement for this year. This little blue dot right there represents the last trading day, which was Friday. Okay? Here's where we are in the middle of August. So this is where it usually moves, this area right here. So I want to take my mouse, get onto that little blue dot, left click, drag right, that opens up, and there you go. The next 2 or 3 weeks. Okay, here where we are. 8, 9, 12, 13, 15, 16, all the way up to the end of August. So from now to the end of August, what does that look like? That looks like that baby's almost dead. Okay, perfect, almost a perfect flat line. That just gives you an idea, based on historical performance, how has the stock moved over the last 10 years during this time frame. Well, if it perfectly goes flat, why not jump in? Because what am I looking for? I'm looking at a covered call. Well, I want one in the money. So if I'm buying it at 216 and I sell the 215s at 360, well, that's over 1%. And what does the stock have to do? It's just going to stay above 215 between now and Friday. Well, where is it right now? Well, right now it's at 216.24. So if the stock goes up, I make my money, no problem. If the stock stays exactly the same, doesn't move at all, I make my money. Great, no problem. Stocks only move three ways: up, down, and nowhere. I'm not going to say sideways because it doesn't go sideways. It goes up, it goes down. Okay, so if it doesn't go anywhere else, it goes up, goes down, and it just stays in this one area. Okay, so if it goes up, I make my money. If it goes down, I still make my money, because where's my break even? I'm going to show you what my break even is, because we're going to do a quick little example here. Now I like the 215. Let's do the 215. Boom, there we go. Let's get rid of this. And then I will hit confirm and send. And here we go. Check it out. I'm going to buy 10 covered call apples, 100, 16 August 24. Well, that's this coming Friday. All right? The 215 call option with Apple at 212.71 limit order to open to open. Why does it say to open? Well, because it's two orders. Two orders in one trade. I'm buying the stock. That's one order. And then I am selling the option, the covered call, one of the safest trading strategies there are. Now, you buy the stock, you sell the option, great. Well, on this particular trade, my break even, look at it, my break even, 212.71. Well, what's it at now? Well, now it's at 216.45. So if it goes up, I'm great. If it stays the same, I'm great. It can even come down, and I'm still good. This is what I call one of the perfect trades for me, because I'm making over 1%. Okay, it doesn't really matter which direction the stock goes, as long as he doesn't drop below 212. And right at the current moment, she's at 216. She's at 216, and she's in an upward trend. Look, she's at a 30-day bottom, 1, 2, 3, 4 days to the upside, and we got plenty of space to run to the 30-day previous high. Well, to me, that's a perfect opportunity to jump in. So let's go back and take a look at this again. 215, there we go. Now, before I move on, this particular trade is for 1,000 shares. If that's too much, let's change it a little bit. Let's change it down to 500 shares. That way people don't get too uncomfortable with the numbers. The percentages are always the same. So whether you buy 100 shares or whether you buy 10,000 shares, the percentages are always the same. 1%, 2%, 5%, 10%, just that the numbers are bigger. Okay, so 500 shares, 5 contracts. Okay, still, my break-even point is 212.71. My maximum profit on this trade is 1,145. We break out the calculator. Here we go. Clear everything. Now, I want to figure out my rate of return. I take my profit, 1,145. 1,145. I divide it by my purchase price or my investment. Now, if you think of this as a business, well, it is an investment in your inventory. The inventory in this situation is 500 shares of Apple stock. Now, that 500 shares of Apple stock is going to cost me $100,000. But hold on, I'm not done yet. 106,355. That gives me a grand total of 1.07%. See, 1.07% return for the week. And what does stock have to do? It's got to stay above 212. It's at 216, and it's in an upward trend. Well, great. I love all that. Now, what other numbers do I have here? Well, if you have an all-cash account, this is going to cost you $106,000. Okay, a margin account is going to cost me $52,000. So let's see what the rate of return is on a margin account. The profit is still the same, $1,145, but instead of $100,000. Now remember, a margin, half the money is mine, half the money is my broker's, because I got to pay interest on that. And I really suggest people not to do margin money until you understand exactly the risks there are to it. Now, the only thing difference between margin money and cash is my rate of return is basically double. So it's 2.8%. 0.17%. I'm particularly not that fond of this particular trade. All right, back to where we were. Here we go. All right, so that's Apple. There you go. It's actually a wonderful trade if you think about it. Because take a look. What does Apple normally do? For the seasonality, let's check it out. You're going to love it. Apple. Okay, here's where we are now in August. But take a look at the chart. From January 1st to December 31st, it's almost up all year long. There's no big down. There's a little bit of a trace back in the end of February, and then another little pullback in the end of September. I mean, the end of August, beginning of September. But for the most part, January 1st to December 31st, yeah, it has a tendency just to go up, and that's it. The calendar's on Thinkorswim, yep. Check out J.P. Morgan. All right, Barry, let's check out J.P. Morgan. Standard JPM. So, J.P. Morgan. Interesting. First thing, always, high, low, where was it? Where is it going? All right? What am I buying it for? 208. Well, 208.34. The 207s, that's the closest one. The closest one to sorry, that's not 2. That does say 208. Okay, now, here's an example of something you need to keep your eye on. Now, we are on the weekend, we are in after hours. So, these numbers here are going to change constantly during the market, when the market is open, between 9:30 and 4 p.m. These numbers are going to constantly change. So, the last traded price was 205.80. Hypothetically speaking, we should be looking to buy it somewhere at 206. And at 206 is around here, around $3. Fine, that's over 1%. Nice. A year ago, the chart was at 153.74, bottomed out at 135, and that was the end of October. Okay, she shoots on up to the high of the year at 217, and that was in the middle of July. So from the middle of July, the high, right, at 217, she drops to here to 191. 217 to 191, that's a big drop. Yeah, well, there's going to be accumulation, 1, 2, 3, 4, and we still have plenty of space to go. Okay, that's another good one to jump into if you like the numbers. So if I'm going to buy, you're going to check on Monday, because this spread is just inaccurate. 205.45, 208.34. Yeah, it's usually only like a 5 or 10 cent spread. This is a couple of dollars, so you really can't use these numbers, and I hate it when the market maker does that because it throws off my math. But if you like J.P. Morgan, the chart is telling me, okay, I'm not telling you, the chart is telling me this is a good time to jump in, because that thing's going to continue to go up. So I'm going to write J.P. Morgan down for next week. JPM. Ugh, that stuff is horrible. Yep, it's horrible. It's tea, honey, and I think it's whiskey or brandy. It's supposed to clear up that cough that I got. It works, but it tastes horrible. Villian ARC formula. New trading. Can one option trade a dividend date? Can one options trade a dividend date? All right. Villian ARC formula. That makes no sense to me whatsoever. New to trading. Can one options trade a dividend date? If someone could help me out with that, because that makes no sense to me. MGA. Grill bit. Kind of like a drill bit, but a grill bit. So MGA, huh? MGA. What is MGA? Magna International. Never heard of it, dude. See, here's the thing. I've been trading for over 20 years. This particular strategy for over 15. Now, my first 5 years, I did a whole bunch of other stuff. But this one, it just turned out to be so simple and what do you call it? Predictable and consistent. I just don't trade much other strategies anymore. Because I get in the morning, I turn my computer on, I'm on 15, 20 minutes, and that's it. And I make my 1% consistently. And it's kind of boring if you think about it, because it's the same trades week after week after week after week. Okay, now you guys are new here. I've been doing this for 15 years. You can go back. Hey, you know what's going to be fun? It must be fun. Let's go back and take a look at a couple of the older videos. Older videos, because some people find these things to be funny, because they kind of are funny if you think about it. Videos, the oldest. Now, remember when I said I created it for my 9-year-old daughter? Is it the volume up? Where is it? Right there.
Like we call it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every month you'll be getting 4 lists of stocks that you.
It's actually every week nowadays. But years ago, it used to be once a month. But now we did it.
List number 1.
List number 1.
Is stocks that are paying out each year, I think. And then
That means every single day you can buy a different stock. Because every single day there's a different company paying out dividends. Yay!
I always think that's funny as hell. It was like 13 years ago. Okay, so I've been doing the same thing for the past 15 years. That was my daughter when she was 11, I think, at that time. But if you go back and take a look at all my old videos, you will see a lot of old videos. You see a lot of my old trade. And you know, here's something funny. This is one of my old websites. No, that's not what I want to see. Bloody damn it. What is this? Oh, yeah, those are the books. There's me, splash page, blah, blah, blah. All right, let's get back to where we were. All right, anyway, I found one of my old web pages, and it has trades from 2012, 2013, 2014. And you can go in and you can look at the trades that I've done 10 or 15 years ago. Okay? They're basically all the exact same. All right. I didn't realize your calendar was on Thinkorswim. Well, all right, Dennis. You can still use the 3 green arrows even though it's not supported by TOS anymore. Not quite sure what you mean there, but okay. So MGA, grill bit, sorry, it's going to be a no. Dave. Johnny, thank you. I didn't know that when I set up my Robinhood account, I will have to check. Okay, Johnny, sorry, I don't quite remember what we were talking about, but all right. Johnny Q65, all right. What broker do you use? Well, I use Thinkorswim, which is where I do my trading, but that goes through Charles Schwab. Now, I have several accounts here, and I have a couple accounts with Robinhood. Robinhood, I think, is great because it's simple, it's easy, it's right there at my fingertips, and I can do it while I'm on the crapper. Or I can do it while I'm on the bus. I can do it when I'm a passenger in the car. I can do it while I'm sitting in the waiting room, waiting for someone. I've been trading in all different places. If you see some of my old videos, you'll see me trading on the beach. You'll see me trading in the mountains. You'll see me trading wherever I can get a signal. But it only takes a couple of minutes. What's your account size? Or HD, I have 6 different accounts. Okay, it's the 3 that I share with you guys. All right, where is it? Right here. Okay, these are the 3 accounts I share with you guys. Okay? This one, account number 1, it started off the beginning of the year at 117. Okay, now it's at 142, but I've already taken out over almost 30,000. You know, 1,300 a week. Account number 2 is 100,000 in cash, 100,000 in margin. That means it's borrowed money. Now, new one I just started. It started out about a month ago with 100,000. Now it's at 131 in a month and a half. I'm up 31% in a month and a half. That's freaking crazy. But this one here has different strategies in it. Okay, this is not just covered calls. This one and this one are just covered calls, which is a strategy I'm teaching you now. This third one here is kind of like, let's call it off the charts because it doesn't fall into the parameters of the other tradings. And what do we got? Okay, week 28. Okay, account number one. See all my positions? Account number one, I got 5.2% on week number 28. Account number two, all those positions, I only got 1.13. Right, not as good. Okay. And account number three, 3.84% for just that 1 week. Okay, so remember, this one had 117, this one has 167, and this one has 131 at the moment. So every week they go higher, and they're all over the place. So if you want to know the account size, those are the three that I share with you guys. I get a few that I don't share because this is not my only trading strategies I know, but this is the only one I show here for free because I consider it as a stepping stone. It's something simple, it's something easy to get you started. Now, once you get started with a safe, simple trading strategy and you're making 50% per year, great, fine. After you're really good at it, then throw in some other trading strategies. But find one, whatever it is, find one, stick with it, and if you're making a decent amount of money, after you perfect it and after you get really good at it, then add other stuff to it. But don't look, this is just my humble opinion, don't clutter your mind with more information than needs to be. Because there's so much information on Thinkorswim, it will boggle your mind. Now, I've been using this trading account, this platform for about 20 years. I only am familiar with about 2, maybe 3% of what's on that platform because a lot of stuff has got nothing to do with me whatsoever. Okay, and I don't want to clutter my mind up with things that, all right, well, let's check, see how it works. Well, let's do this. No, I make 50% a year. I'm perfectly happy with it. Okay, now I've been trading long enough to know that I've lost a whole bunch, I've made a whole bunch. Okay, but 50% a year is a nice number to go with. And I'm at that point in my life where time is more valuable to me than money. So I actually prefer sitting around doing nothing, watching stupid movies, playing in the grass. I spent 2 or 3 hours planting plants the other day, or transplanting plants and propagating. I actually enjoyed it. But the money thing, yeah, no. Perfect, thank you. All right, Mr. Bishop. Aiden, what has been the best financial advice you've ever received? Oh, never stop asking questions. How's that one? Johnny Q, what YouTube feed to see your big screen? The 10-Minute Trader. Okay, when you go to the 10-Minute Trader, okay, this is where you're going to land. The 10-Minute Trader, and then you slide down, and it says 2 live streams. Okay, here's the one with just the computer screen, and here's the one of me standing in front of the computer screen, which is basically what you're seeing here on TikTok. Okay, so TikTok, YouTube, Facebook, Instagram are all seeing the exact same thing, me standing in front of the screen. And on this YouTube channel right here is
just the computer screen. And here's the one of me standing in front of the computer screen, which is basically what you're seeing here on TikTok. Okay?
Well, no, that's
so
interesting.
TikTok, YouTube, Facebook, Instagram are all seeing the exact same thing. Me standing in front of the screen. And on this YouTube channel right here is just the computer screen. And here's the one of me standing in front of the computer.
Enough of that. All right, so let's get back to where we were. MGA. Div's good. Hey, we already looked at MGA. That's going to be a no. Sorry there, Grill Bit. Johnny, thank you, James. Always appreciate you. Have a good night, you too. Ooh, Barry Scott. We already looked at JP Morgan, but we will take a look at Honeywell. HON. Okay, first thing, always first thing. Quick glance. High, low, was, is, and direction. Great. It takes 2 seconds to see that. Maybe 3 if you're slow, 4 if you're really slow. But high, low, where was it, where is it, and which direction is it going? Really not that difficult. When I say do not make it more complicated than it needs to be, you don't actually have to see the exact dates, the exact numbers. No, you just going to get a quick glance. High, low, was, is, and the direction. Okay, fine. Now, I like that, so let's go on over to the numbers. 198.50. The closest one is going to be the 197, and that's going for 230. All right, so I'm losing a buck right off the top because it's at 198, and the 197 is going for 230. So if I lose a buck, it means I'm only making 130. Yeah, look at the 200. It's only for 110. Yeah, no, the number's just not working on this one. Now you may like Honeywell, and you may be okay with getting 0.5% per week, because 0.5% per week comes to 24% a year. Well, that's still good, right? All right, but ask yourself, if you really like Honeywell, well, that's what it's paying using this strategy. Okay, that's not even going into what's happening here in the chart. That's just strictly the numbers. Now, for me, I would say no, because 0.5%, I know there's other companies giving me more, like 1% or 2%. So me personally, I would say no to Honeywell for this current week. It's not a no totally, but for this current week, I would say no, because the numbers just aren't working. What website do you use? I use Yahoo Finance. Because Yahoo Finance, well, I've been using it for the past 20 years. It's easier for me to navigate. I'm sure it wouldn't take long for me to figure out Google Finance or New York Stock Exchange Finance. Ooh, why is that not plugged in? Looks like my phone is going to die. And we all know we don't like the phone to die. All right. I just plugged you in, man. There we go. All right. Never mind, I found it. All right, Johnny. You still showing single spread trades? Yeah. Well, I like things simple, safe, predictable, and consistent. So they have an old saying when I grew up, if it ain't broke, don't fix it. Okay? Rich Bruner. Uh-oh. Uh-oh. I missed a lot. Uh-oh. Oh, there's Rich right there. Coles. Coles, if you haven't already covered it. All right, let's take a quick look at Coles. KSS. Coles. Here we go. Again, first thing. High, low, was, is, direction. Cool. Currently at 20 bucks. All right. See how quick that is? Now we go to the price. 20.40. 20.50, 39 cents. Now I know 39 cents doesn't sound like a lot of money, but it's more than 1%. If you want a quick way of figuring out what 1% is, you see what the number is? 20.41. You take that point and you just move it over 2 spaces to the left. So 1% of $20.40 is 20 cents. It's actually that easy. So currently, the closest one's 20.50. That's 39. That's well over 1%. Great. Now I want to take a deeper look at the chart. A year ago, 27. Bottomed out middle of October at 17.80. Topped out at 29.65, the end of March. Okay. Last 30 days. Check out the last 30 days. 30 days ago, 30-day high. Drops, retrace, drops again. Here's your bottom right here, 18.50. 1, 2, 3, 4 days to the upside. That's another freaking invitation to jump in. Now I already own Coles, but I'm writing Coles down again for next week. Now, what does Kohl's normally do this time of year? For that, we look at seasonality. This time of year, okay, basically sideways. No big moves in Kohl's. So it works for me. Now, what do we have next? It's not a dividend stock, but you have covered SoFi. 11. Yeah, I've looked at SoFi in the past, and you know what my conclusion for SoFi was? No. Actually, it's that simple. No. Okay. High, low, was, is, direction, blah, blah, blah. It's at 664. Okay. If I was going to buy it at 663, it sold the sevens at 7 cents. Well, that's 1%. You're making your 1%. And look what you got. Okay. 30 days ago, we're at 640. Jumps up to 8. Drops down to 7. Jumps back up to 8. And drops down to 6. 1, 2, 3, 4 days to the upside. Well, there you go for SoFi. Now, SoFi's not on my list. I don't even think they pay out dividends. So why would I look at it? I'm just looking at it for your benefit. Not that I would do it. Your trades are not covered. Okay, user 6134. Your trades are not covered. They're single. Okay. I'm not quite sure what he means by that, but all right. Dividend, LOL, okay. Stifler's mom. Dude, I haven't heard from you in a while. Can't forget that name, Stifler's mom. Are there ever weeks where you have absolutely no good positions to trade? Never. Never. Never ran into a single week when I didn't have something to do. Okay? Now, I look at 300 companies consistently, week after week after week. And then I have those certain companies that I will trade, even if they don't have the dividend coming up. Okay? Macy's is one, Ford is another, General Motors is another. And that would just, that would just depend on the stock chart. John, is $4,000 enough to begin earning bill money? Bills are $500 a month using your system or strategy. All right, so if you do the math, John, $4,000 a month, 1% of $4,000 a month is only $40. Okay, it's not a lot. So $40 times 4, that's $160. It's not a lot. So $4,000, a 50% return is $2,000 at the end of the year. But, if you can double your money every 16 months, 16 to 18 months, well, that will get you to your goal a lot quicker. Okay, but 4,000, yeah, you can do, it might help out some. Okay, 1%, that's 4% a week, that's only $160 a month. Okay, yes. Michael David Robinson. I stand corrected, James, on sideways. Sorry. Well, if you think about it, they only do. They go up and they go down. It looks like they're going sideways. Fun and wild and scary. Fun and wild and scary. Why do you call yourself the 10-minute trader? Actually, I don't call myself the 10-minute trader. My daughter, she was the original 10-minute trader. I had to create a strategy for her. I said, come on, honey, it's only taking about 5 or 10 minutes. She said, all right, Dad, 10 minutes. So I had to make it simple. Simple, safe, predictable, consistent, no way that she can lose, and something she can do in 10 minutes. Let me show you quickly what I mean by that. Okay, so let's take a quick look at this week right here. Okay, the 12th, 13th, 14th, 15th, and 16th. That's actually this coming up week. Now we have how many companies here? 5? Well, let's see how long it takes to take a look at 5 companies. Now I'm just going to go through them really quickly and show you what I'm looking for. And remember, try not to overcomplicate it. All right? First one, Apple. AAPL. Okay, chart's okay. 216, 216. Okay, get my 1%. Great. There. Okay, great. Wonderful. So I like Apple. 216, the 215s, there we go. Boom, confirm and send. There you go, 2,200, 22,000, blah, blah, blah. Okay, that's one trade right there. Okay, let's get out of that. Go back to here. Capital One Finance. COF. Okay, chart high, low, blah, blah, blah. Last 30 days. Ooh, nice. 141. The 135s, the 135s. Okay, great. Again, love it. Seasonality. Okay. Kroger. KR. Okay. High, low, was, is, direction. Yep. I'm not 100% sure what that was going down. That's going to be a no. Heimlich and Payne. That's a no. It's a monthly. Moody's. MCO. MCO. Monthly. No. All right. So basically, I just went through 5 stocks in less than 5 minutes. Okay. I got 2 yeses and 3 nos. Apple's a yes, Capital One Finance a yes, Kroger's a no, Heimlich and Payne's a no, and Moody's a no. Don't make it more complicated than it needs to be. Find a good company. How do you decide what's a good company? Well, that's going to be a choice that you got to make. Okay, I like the Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, and Warren Buffett's list. Those 5 lists right there, which you can easily get for free from Google or whatever search engine you use. Just go to Google, take Dividend Kings list 2024, Warren Buffett's list 2024, and it'll give you the whole list of all the companies. Now, all those companies have increased their dividends for more than 20 consecutive years. Not all of them. See, some of the dividend contenders are 10 years to 24 years. So some of them don't quite make it. You're going to have to decide which ones you like and which ones you don't like. I particularly like companies that have consistent increased dividends. And then I look at the chart. Well, look at Moody's chart. Okay? It's at the high of the year. I don't buy at the high because you're going into a territory where it's never been before. It's like, you ever been through the woods where nobody's ever been? There's no path, there's no trail, there's nothing but woods. You have to blaze your own trail. Well, has it ever been at 465? Well, not this year it hasn't. So what makes me think it could actually get to 465? It was worth 465. It would have hit 465. Okay, so no, it's not a choo-choo train I want to jump on. Sorry. I personally would wait for it to go up, come down, and get it somewhere down here. Go up, come down, get it somewhere down here. Not up here with the new high is. Yeah, no thanks. I got 6 more questions. Do you think elections would have some effect with Apple? I honestly couldn't answer that question. Sorry. All right. Talk more macro. All right, Icy Fox, you got to be more specific. What do you mean by that? Good morning, James. How are you? Wave Runner, I'm doing wonderful. I have 100,000. Build me a portfolio. Well, build you a portfolio. You ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. There's your portfolio right there. Pick and choose. Throw it into a calendar. Whatever comes up, great. What does Apple look like this week? What does Capital One Finance look like this week? What does this look like this week? What does this look like this week? Great. Find which one looks the best. Which one's going to give you the safest and best place to put your money. Safest and best place to put your money. Don't ever buy a company you do not understand or you do not want to buy and hold for the long term, because you just might have to. I've been trading for 20 years. The longest I've ever held anything was 9 months. And I didn't want to hold it 9 months. It was Kimberly-Clark last year. I bought it. It dropped. I kept selling covered calls against it even as it's going down. And I was still bringing a cash flow every single week. Now I've held it for 9 months, which means I collected 3 dividends. Okay? 3 dividends and about 15 premiums. There's a premium every single week. Okay, so 9 months times 4 is about 32, 33 premiums. Yeah, I was wrong. Anyway. Barry, you're welcome. JMIT, could you please show again what option to select to see past performance? Oh, that would be that would be seasonality chart. Okay. So for the seasonality chart, well, you want to drag this all the way out of your way. And then you want to come up to style, all right up over there, style. And then this drop down box comes. Chart mode, standard, monkey bars, seasonality. Okay, this is the seasonality. This tells you what is done over the last 10 years. Now, this one is set for 10 years. I can always go here to where the little D is, and I can change it for 5 years. So this is what the chart looks like for 5 years of history. 10 years of history, and change it to 20 years of history. Okay, now I personally think 20 years is too far in the past. Okay, it's a total different world 20 years ago. 10 years ago, not so much. But what are my opportunities? 20 years, 10 years, 5 years. 5 years I don't think is quite far enough back, not enough data in my humble opinion. So I have mine set for 10 years. Okay? But that's how, that's how that's set up. That's where you find that information. Okay. So, take on a couple more questions. I have scattered brokerage lately, and I'm trading just breakout expansion long. Thrill Billy JP, down for the cause. I have no idea what he's talking about, but all right. I have scattered brokerages lately, and I'm trading just breakout expansion long. Okay, you know what I say? More power to you. If it works and you're happy with it, great. I'm just sharing what I do, okay? Now, I like a safe, predictable, consistent 1% per week. Takes me less than 10 or 15 minutes a day. Barry, can somebody teach me this in person? Well, I am gearing up to do seminars, those 1 day, 2 day events. You can fly down to Florida, or I can go up to DC, Boston, Chicago, wherever. Sounds like fun. Please message me, phone number, and how to get a hold of you. Well, let's try this, Barry. You ready? Go like this. I'm going to send you a message right there. And Barry, this is me sending you, I'm going to do this right here. Barry, this is me sending you a direct message, and that would allow you to reply to me directly after the show, and it'll go directly to my account. There you go. So I just replied to you. So where was I? Please message. Okay, Thrillbilly. I did stumble upon this crazy thing. Gives me absolute insane signals. I'm talking 125% third trade. Okay? Good for you. Bless what you are teaching, though. Obviously, I'm watching. Well, there you go. Now, Thrillbilly JP, there are lots of ways to make money. Really, there are. If I was younger and I had a different risk profile, okay, my profile nowadays is different. I'm retired. I don't have the luxury of 10 or 15, 20 more years of working. I could, but I really don't want to. It's weird. I've been working since I was 13. I'm now 60 years old. I have a certain amount of money, and I use that to live off of. Okay, fine, dandy. Now I'm teaching you guys what I do. Fine. You guys want to learn? Great. I'm here every night. I've been here every night since the beginning of January. Now I've already committed myself to be here every single night until the end of the year. At that point, I will then decide whether I want to continue doing it. But until then, this is the strategy I'm teaching. All right? It's simple, it's safe, it's predictable, it's consistent. There's no way to lose unless you do something that you shouldn't do. Rule number 1, never buy something you do not want to hold. Always buy something as if you're going to hold it for a long time. Rule number 2, never sell at a loss. It kind of defeats the purpose. Rule number 3, make sure there are plenty of dividend increases. This way you know the company's consistently profitable. Rule number 4, make sure there's weekly options. Weekly options will allow me a safe, predictable weekly cash flow. And rule number 5 is make sure the numbers the numbers work. The numbers, what are they? What am I buying it for? What am I selling it for? What is the the chart telling me? Those kind of things. Yeah, Moody's is going to be a no. Okay, so what else we have? What was the broker again? Well, this chart here behind me, all the stuff behind me, is from Think or Swim. You can go to thinkorswim.com and you can download this onto your computer. Right? Now, to do trading with Thinkorswim, that is through Charles Schwab. Okay, now Charles Schwab didn't come up with this. Charles Schwab bought it. Okay, find the closing of consolidation. Hopefully we will find a breakout. Yeah. Now, Thrillbilly, you're making it more complicated than I would like it to be. Remember, I want simple, safe, predictable, and consistent. I don't want to look at anything. Poseidon's last molar. Nice of you to join in. I just got Thinkorswim. Consider me boggled. Boggled. All right. Well, Poseidon's last molar, if you want to DM me with a number, I can walk you through how to set it up like mine, if you're up for it. J-Mitt, could you please show the strategy again? I joined the middle. Well, Jay, you got to give me something to work with, because the strategy is pretty simple. Find a good quality dividend stock that continuously increases their dividends. Okay, Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Okay, a good company consistently increases their dividend and has weekly options. Why weekly options? Well, I want a weekly paycheck. Sorry, I spend about less than an hour a day, probably about an hour, hour and a half a week. So an hour, hour and a half a week to get a 1% on my account, fine, that works for me. All right. I really appreciate you being on here. Am I reading that right? Cleavage? Is that the name? Cleavage? All right. Anyway. All right, Cleavage. All right, Thrillbilly. What if I offered signals that double trade within a week, any size? I would have to see what the downturn is and what the learning curve is. Because to be totally honest with you, if I sat in front of my computer, I could probably make a nice return per week. But that's not what I'm here for. I'm not here to teach people how to make a lot of money. I'm here to show you how I do safe, predictable, consistent for less than 10 or 15 minutes a day. 10 or 15 minutes a day is less than an hour a week. So if I have a $100,000 account, 1% is $1,000. 1 hour, $1,000. That's pretty damn good if you think about it. If you got a $300,000 account, 1 hour, that's $3,000 an hour. Depends on how you look at it. I have no desire. Now, I know a lot, and I'm sure you know a lot too from the information that I'm reading. But is that the way you really want to spend your time? And there's absolutely nothing wrong with people like you sitting in front of your computers for hours and hours looking for trades, making tons of money. Great. Well, we need people like you. We need someone to make, it's not up here now, but the volume to move, and this right here. Okay, you see an opportunity, you buy, you sell. Great, wonderful. Well, we need those tickers. We need to see it. Never mind, I got YouTube. Okay, Jay. All right, Cleavage, I'm going to watch your YouTube channel to educate myself about how to make a difference in my life. Well, cool. If you want, now I tell this people every night, and not everybody does it. Okay, you really want to talk to me, pick my brain, DM me with your phone number. I will give you a call, and we'll chat. This may be right for you. This may not be right for you. It's not right for everyone. It is slow. It is boring. It's monotonous. It's systematic. It's safe. But it depends on how you want to look at it. Now, me, I want to get up in the morning, put a half hour to an hour in, and be done for the week. That's basically all I do nowadays. Cleavage, you're back. I'm not quite sure what that means, but all right. Barry, can you teach me this one-on-one? I have to get off now if you can give me the information. All right, Barry, just send me your number. I'll give you a buzz. Whoops, I can do that again. All right, Barry, send me your number. Why is it not working? There, now it's working. Comma, send me your number. I'll give you a call. Okay, what if I offer you that? Okay, yep, never mind. Got it. Good. Yep, there you go. On how to get hold of you. Thank you. Good night. Great job. You've done 90 minutes. Thinking you are teaching covered calls, not single under spread. Okay, I'm not quite sure what this guy's talking about. User 6134. HD, is your method safe enough to use my entire savings? Well, HD, well, I don't give advice to anyone. But this advice I give to everyone. Don't put your money in the stock market. Don't listen to me. Do some research. Do some paper trading. Paper trading, virtual trading, whatever you want to call it. It's kind of like playing Monopoly in the stock market, where you're actually making trades, but it's not real money. Once you get really good at that, then think about it. Okay? Now, just to let you know, 98% of all of my money is invested in the stock market at all times. Now, I've been doing this for a very long time. I've got a debit card and a credit card attached to my trading account. Anytime I need something, I just click, sell it, boom, there's the money. Okay? Do not do anything until you are okay with what it is you are doing. All right? Now, I honestly believe in investing in America. Almost all the companies I look at are American-made companies. Okay, AT&T, General Motors, Ford, Macy's, Nordstrom's, Coca-Cola, Pepsi, Bank of America, Wells Fargo, Visa, MasterCard. You're putting this money back into the economy, getting these companies moving, and then you're getting a profit for it. That's what investing is all about. So HD, think hard, long and hard before you do that. Look at your Thinkorswim board under spreads. You are set to single, not covered tonight. All right, user 613, I'm well aware of that. It says single. Yeah, I get that. There's vertical, back ratio, calendar, diagonal, and then there's covered. Okay, covered doesn't give me what the option value is. See that right there? It doesn't give me the option value. So it's hard for me to say, oh, well, this is what it's paying. No, it doesn't work that way. So if I go to single right here, well, it does give me the option value. So I can take a look at the stock price, the option price, then I can figure out what it is. Okay, if I had it under covered, okay, look at the stock price, 1951, come down here to 1950. I can't tell you what kind of rate of return that is because the number's not there. Okay, so I appreciate it. Thanks for your input. How about Mosaic for Monday? Mosaic. Nice company. Again, over 100 years old, I believe. Not 100% certain on that one. But look at the chart. Very first thing. High, low, where was it? Where is it? What direction it's going? Look at this area right here. Okay, she drops, finds the bottom. Now she's going to the upside. I want a close look at that. Great. That's the first thing I want to see. Second thing I want to see is what am I paying for it? 27.25. 27.25, the closest one's going to be the 27.55. Great. The 27.50, 32, both of them are over 1%. The 27 would be the safer bet because the stock doesn't have to move. You can stay where it is. But here's the thing. A year ago was the high of the year, 42.77. The bottom of the year was, what was that was Monday. Last 30 days, right there. So, 30 days ago was the previous 30-day bottom. She shoots on up, what was it, 26.50? Shoots on up to 30.50. That's a $4 increase. A $4 increase on a $26 stock. Well, that's 15-17%. It's over 10%, I'll tell you that much. Anytime it goes above 10%, yeah, I'm getting out. I want my profits. She drops, pulls back, drops again. New 30-day bottom right here, 26.10. 1, 2, 3, 4 days to the upside. What are you going to say to that one? Now, Mosaic, I'm going to write that one down for next week also. M-O-S. Mosaic. All right. Wave Runner. James, what's your most profitable sector if you had to keep the stock sector? Just curious. All right. It's an interesting question, Wave Runner. But I say this at least once a week or twice a week. Okay, I don't categorize my stocks any other way other than the calendar. That's it. Okay, so Chevron, Jefferies, and UPS. Okay, well Chevron is oil stocks. Jefferies, I have no idea what the hell they do. That's on Warren Buffett's list. And then UPS, well, we know what they do. Okay, three different sectors on Monday. Do you honestly think I care? No, I honestly don't care. I only care that there's 3 on Monday. Great, I'm looking at all 3 of them. Okay, now they've already increased their dividends. That's why they're on this list. Now I don't ever. Once I see them on my personal list on this calendar, I never question them. I don't. I just question, is it the right time and are they paying me enough? Not, do I like it? Every single one on the list I do like, but they aren't all a yes for the time that they pop up. So Apple, Capital, and Finance, well, they have a dividend come Monday. Great, but are they all on my list? Yes, they are. What am I looking for? Well, am I looking, hold on, let's pull up Apple. Okay, very first thing I want to see in Apple. The high, the low, where was it, where is it, and where it's going. Well, this is what I'm looking at. Look, here's the high, here's the bottom, 4 days to the upside. Well, that's a yes. The chart is telling me this is a great time to buy. That's what the chart is telling me. The chart is telling me that, not the numbers. Well, let's go back and take a look at the numbers. Well, currently right now, 216.45 is the current stock price, 216.45, if I want to buy it. So at 216.45, well, I have either the 215s, which are going for 360, or the 217.50s, which are going for 228. Both of those positions are over 1%. I would prefer to do the 215 because it's a safer trade. I prefer safety over capital gains because I'm 60 and I don't really, because I have no clue whatsoever when my expiration date is. I don't. Okay, every week I hear, or every month I hear about one of my classmates. There was 365 of us when we graduated. Within 1 year, our first classmate died. Now we have like 50, 60 of them have died. But that's been 40 some odd years. So who knows how much longer any one of us have. So am I going to buy something and hold on to it for 5 or 10 years, wait for it to grow? Not at this point in my life, I'm not. I'm jumping into something, collecting my 1%, getting out, saying, thank you, I'll see you again in 90 days. So I don't, to answer your question, Wave Runner, I don't categorize anything. Felix, James, did you cover TSM yet? TSM? What the heck is TSM? GSM. Taiwan Semiconductors. Damn it, I didn't think this one was on my list. Well, let's check. Yahoo Finance, TSM. Oh yeah. Yeah, yeah, I don't like this one. Here's a couple of reasons why. Okay? They only pay a dividend once a year. Once a year. So that means I only want to buy it once a year before the dividend. And that's in June or July. Okay, 2004, 8 cents. 31, 38, nice. 44, nice. 50, continuously up. Now, 45, 47, they went down. They went up, then they went down. 52, 50, 50, 50, 73, 93, 116, 135, 128, 32. What? It went from 128 to 32? That's a 75% decrease. What the hell are they thinking? 41, 42, 43, 44, 50, 49, 47, 45. It's going down. Why is it going down? 45, 48, yeah. Sorry, they pay once a year. Wait a minute. They paid once a year right up until 2019. Okay. So like the first 15 years of paying dividends, they paid once a year. Then in 2019, they paid 4 times a year to where they are now. Now they're not consistently growing. Okay, 47, 45, 45, 45, 45, 47, 48, 54, 50, 55, 54. Yeah, that's not consistently going in one direction. So TSM's a no for me. Felix, they taking business from Intel. I'm sure they are. Okay? But they're not consistently growing. Consistently. Yeah, they're growing, but not consistently. Do you need a minimum to get into options? No, not really. Do you buy just straight stocks? No, I don't. Okay? I don't buy anything to hold on to. All right? I buy a stock, I sell a covered call against it. I'm here specifically for a 1% return. Whether I get that through cash appreciation, when stock goes up, fine. The dividend, fine. But the covered call or the stock option is my favorite way of doing it. Because if I'm buying something, okay, 167. Okay, so check this out. If I'm buying TSM at 167.15, I'm selling somebody the right to buy it from me at 167.50 or 165, either one. So I'm buying it for one price, selling it for almost the exact same price, and I'm collecting the premium. The premium is what I want. Do I really care where the stock is? Kinda yes, kinda no. All right, I want to take a look at the chart, see what it's doing. Here's the high. Okay, high's up here. And that was, the 13th, 8th, 9th, 10th, 11th, somewhere around there. Okay, the middle of July. And then she drops down here to the beginning of August, 4 days to the upside, and all that space there. You have all the odds and probabilities pointing in that direction. And am I making over my 1%? Yep. So if I buy it at 167, sell it at 167, collect a little over 1% for the week, back into cash the following Monday, great, I'll find another company. Now there's about 300 companies I look at on a continuous basis. There's always something for me to buy in order for me to make my 1% per week. So if I like TSM, all right, I could jump in, buy it at 167.15, sell it at 167.50, get 420, which is over 2%, or the 165, which again is over 2%. If I like TSM, which they pay dividends and they're okay with their increases, they're just not consistent with their increases. Now, you got to decide what companies you like. Do you like TSM? Well, great. Put it on your list. Okay, this is what they're offering this coming week. All right, either you like it or you don't. What else we got? Do you need a minimum? Oh, Manny. Kind of like dating. Never get something you don't want. Manny, I'm not going to touch that one. Johnny Q, test, not quite sure. But sweet butt, sweat, and beers. Interesting. AT&T. We already looked at AT&T earlier. Okay, I think it was a no because the numbers didn't look quite right. Yeah, that's the reason right there. It's a little too close to the high for me. But AT&T may be a contender in a couple of weeks after she drops back down. Okay? Because stocks go up to a certain point where we, me and you, the buyers and sellers, where we say, oh, hell no, it's not worth 20 bucks. Because if it was worth more than 20 bucks, it would have already been over 20 bucks. But it's not. It got up to almost 20 bucks. Then people said, oh, hell no, I'm taking my profits and walking away. Well, that's what they did. They took their profits, they walked away. It dropped down to here, 1860. Now she's going back up again. But it's a little too close to the high for me. So, yeah, I already did AT&T. 100% on Think and Swim setup. Poseidon's Molar, way to go. Bud sweating. Bud sweating fears. You need to be able to have 100 shares. I have a list of stocks under 10 bucks. Cool. Brahma Redneck, way to go. Cleavage, Cleveland. Okay. HD. Is this method safe enough to use entire savings? We already said that. Okay, now I already told you. Don't ever put all your money into one thing. Okay? Now all my money's in the stock market because I've been doing it for a long period of time. I missed all these questions. Sorry about that. Uh-oh. What if, okay, yep, we already did that one. Okay. Okay. Thinking you are teaching covered calls, not single under spread. Okay, HD, safe enough. Yep, got that one. Look at your Think and Swim. Yep, we already did that one. MOS, yep. Oh, I'm almost caught up in the questions. Yep, all right, here we go. Never mind, okay. Blah, 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 blah. Dividend stock. Barry was send me. Yeah, okay. Felix Schwab give live sessions on YouTube. Are they worth watching? I honestly couldn't tell you that, but when you go to an institutional trader like Schwab, they're going to show you stuff that does annual percentage returns. They're not going to show you weekly trading strategies. I don't think. But you can give it a try because, you know, after all, it's your time, your effort. If you ask a good question, maybe they'll cover it. Brother, I'm a day trader. I play very risky trading. I am asking if yours is safe enough to use big numbers. Well, all right, look at it this way, okay? 98% of all my money's invested at all times. I get it safe, predictable, consistent, 1% per week. How you do yours is totally up to you. Now, is it safe? Well, it's one of the safest trading strategies there are. You buy a good quality stock, and that's the key. A good quality stock. The only stocks that I buy have consistently increased their dividends for more than 20 consecutive years. That means they are consistently profitable. Those are the only places I put my personal money. All right? Now, you may be different. I don't know. You may like stocks that I don't like. Now, I am very particular with stocks I like. 20 years of increased dividends and weekly options because I want safe, predictable, consistent 1% per week. Excuse me. So to answer your question, I'm not 100% sure I can answer that question for you. Okay? All my money's invested in it. You may be different. You may not have the same risk factors that I have. But if you're a day trader, well, you probably do. Now, I tried day trading years ago. And yeah, I'd sit in front of the computer, look for certain setups, like you do. You know, you have like 5 or 10 different screens going. You're looking for a certain setup. Boom, boom, there you go. You make your money. Wonderful. You are trading your time for money. At some point, you're going to say, well, money doesn't matter anymore. I have enough. And some people can never get to that point. I have enough. 1% is enough for me to have balance in my life. Now, I'm consider myself lucky because I'm relatively healthy. 60 years old. I don't take any prescriptions whatsoever. Now, I'm not 100% sure if I'm retiring from playing soccer or not because I keep freaking hurting myself this year. I broke my collarbone, a couple of aches and bruises, and it takes me a couple of days to recover from one game. Yeah, I'm not 100% sure, and I hate to admit it. I really do. Okay, brother, I'm a day trader. Okay, there you go. Michael David Robinson, blah, blah, blah. He's on single so you can see through. Thank you, Dave. Mike. Down for the cause. Can you explain your definition of consolidation? Thank you. Okay, thank you, thank you. Oh, holy cow, I'm caught up with all my questions. So far, will you go in the money? Oh, how far will you go in the money? Pros and cons of in the money, at the money, out of the money. Holy shit, that's a good freaking question. Seriously, that is a good question. Well, let's pick up a good, decent stock. What do we like? Ooh, we like Mara or Walmart. Ooh, hold on a second. Oh, that's horrible. It's a hot toddy. You know what hot toddy is? Yeah, tea, lemon, honey, and you think it's brandy or whiskey. It tastes horrible, but it clears up that crap in my throat. Yep. Hey, Mike, you like that question? It's a good question. So let's take a look. Now, the question was, when you're doing a covered call, okay, after we take a look at the chart, how do we decide in the money, at the money, or out of the money? Let me explain what that means. Right now, the stock is at 1951. Well, at the money, ATM, at the money, would be 1950 because it's at 1951. That's at the money. In the money would be 19, 1850, 18, 1750. That's all in the money. The stock doesn't have to do anything. Okay, now out of the money, that would be 20, 2050, 21, 2150, so on and so forth. So you have in the money, at the money, out of the money. So let's take a look, because there's going to be a balance, and the balance is going to be risk-reward ratio. Okay, risk-reward ratio, RRR. Rest, relaxation, and rambunctiousness. Okay. For this, we're going to need our trusty calculator. Okay. Now, 1951 is the current ask price. The stock is AT&T. So let's forget all that for the moment. Let's take a look at the hard numbers, right? In the money, the 19, it's going for 55 cents. So my actual sales price, okay, if I buy it at 1951 and I sell the 19s, I'm only collecting 55 cents. So my effective sale price would be 1955. And what is the difference between 1955 and 1951? Well, it's 4 cents. Do I really want to do a trade for 4 cents? Because if I'm making 4 cents on a $19 stock, well, that's absolutely horrible. Okay, so clear that. 4 cents divided by 19. That gives me a grand total of 0.2. That's horrible. Mama said knock you out. Well, hello to you. Okay, she's Instagram. How you doing? All right, so in the money is going to be a no. It's just not worth it. Okay, so the 1950. Okay, 1950 is paying 20 cents. Now, if I'm paying 1951 and I sell it for 1950, well, I'm losing a penny. So I'm actually collecting 19. All right. So 19 cents, and I'm going to divide it by 1950. And that gives me a grand total of 0.97. That's not even 1%, but it's close. Okay? The stock doesn't have to do anything. Same thing with the 19. If the stock just stayed the same or went up, yeah, I'd make my 4 cents, but that's not worth it. The 1950, yeah, I'm making 0.9%, which is close to 1%. Okay, now let's take a look at out of the money. Now, the one thing about out of the money, take a look. If I buy it at 1951 and I sell the 20s, well, I'm collecting 4 cents again. Not worth it. and what's even worse, the stock has to move up to make that 4 cents. Well, if it moves up above 20, well, I get my 4 cents, and then I get another 49 cents, the difference between the purchase price and the stock price, and then yeah, it's worth more than 1%. But then you have to take the risk and the reward. Well, this one is they're absolutely horrible. The 19, not worth it. 1950, barely 1%. The 20, not worth it, and the stock has to move up in order to make anything. So it always, always, always comes down to the numbers. Now that's this one. Let's take a look at something a little bit more favorable. Macy's. Okay? Macy's is good also. Look, here's your 30-day high, 30-day high, 30-day bottom, 4 days to the upside. Current price is $15.58. At the money is $15.50. We don't know what that price is yet. That pisses me off. The 16s are going for 23. The 15s are going for 74. So 1574, 1558. The difference there is going to be 26 cents. Is that right? No. 16 cents. All right, so the 15 strike price is only offering 1%. Because if you add the 15 to the 74, your sale price would be $15.74. But if I'm buying it at $15.58, well, the difference is 16 cents. 16 cents profit on a $15 stock, well, that's over 1%. But look at the $15.50 at the money. Okay? At the money, it's going for, we don't know, damn it. I hate it when it does that. The 16s are going for 23 cents. Yeah, so the 16s are going for 23 cents, which is over 1%. That's one strike out of the money, and you're collecting the difference between 15.58 and the 16, which is another 42 cents. So this one looks like here the better deal. But then again, the stock has to move up. So at the money, 15.50, yeah, you're probably going to make over 1%. One strike out of the money, you're making your 1%, but the stock has to go up in order for you to be back into cash. Okay, the 15, you're barely making your 1%. So it always comes down to the numbers, and I hope that answers the question. Oops. Felix, I seem to hit strike price on pharma like backs more often, blah, blah, blah. Jim, Altria, high dividends. Ooh, Altria. Let's take a quick gander at Altria. Very first thing I want to see, always, always, always. High, low, was, is, and direction. Cool beans. It looks as if it's going to be a no, only because, whoops. Okay, yeah, this one's going to be a no only because of where it is. All right, your 30-day high, 30-day bottom. Okay, she's going to the upside, but look how close she is to the current high. In my humble opinion, that's too close. That makes me a little uncomfortable. Okay, you get your 30-day bottom down here. Okay, it's closer to the high than it is to the bottom. So it means she might go up a little bit more, turn around, come back down. Because remember, we're looking at 5 days. Monday, Tuesday, Wednesday, Thursday, Friday. I want to jump in on a Monday and be out on a Friday. So 5 days. What does 5 days tell you? Does 5 days tell you, yeah, it's going to continue to go up 5 days? Or is she going to go up a little bit, pull back, turn around? Look at all the space between where it is now and the 30-day bottom. That's a lot of space. Okay? So I don't personally like the way Altria looks. There are too many other good companies that make me feel a little bit more warm and fuzzy. And what is it paying? Well, the 50-50, the 50s are going for 65 cents. Well, that's not good. Because if I buy it for 50-50 and I sell the 50s, I'm getting 65 cents. But I'm losing 50 cents right off the top, which means I'm only making 15 cents. No. One strike out of the money, the 51s are paying 18 cents. No, because the stock has to move up. And then I'll collect the price difference between the purchase price, the strike price, and the premium. Yeah, but the stock has to move. No. The 49.50 is paying 93. Yep. Nope. That's not there either. Sorry. The numbers, no, don't get me wrong. I like Altria. I do. But this week, the numbers just don't look right. Okay, it's not just what the chart is doing, because the chart's one thing, great. If you want to buy the stock and get stock appreciation, that's one thing. But there's no predictability and there's no safety in it, because it might go up and it might not. Well, if I buy a good stock and I make my money regardless if it moves, that's what I'm looking for. I like the odds and probabilities in my favor. And we got 3 minutes left. Are we done with questions? That is a good question. AMD. I think AMD is a no. Because ADM is Archer Daniels. AMD, Advanced Micro Devices. Yeah, that one's a no. Okay, the reason why I say it's a no, it's nothing to do with the charts. It has to do with the dividends. AMD. Okay? There are no dividends in selected time period. So why would I want to do, what the hell is this company? Advanced Micro Devices. All right? Now, here's my thought on this one. This is why I don't like companies that don't pay dividends. Because you can see it clear as day. And if you can't see it clear as day, then you're in the wrong game. Here's the high. What happened? It drops. What happens when it drops? Think about it. What happens when the stock drops? If they don't pay a dividend, you're collecting nothing. Think about it. If a stock drops and they're not paying a dividend, you're collecting nothing. So I don't do stocks that don't pay dividends. It's actually that simple, that direct, right to the point. No dividends, no thank you. That's a no. So we are at 11:30. What a wonderful night we had tonight. Yeah, buddy. But the chart looks so good. For ADM, kinda. It kinda does. Look at it. 3 weeks ago, it was at the 30-day high. It even has a triple top of the 30-day high. Here's all your profit taking. Here's your bottom right here, down at 120. From 185 to 120, that's a $60 drop. That's a huge drop. Okay? 1, 2, 3, 4 days to the upside. Great, if you like that company. Don't get me wrong, it may be a great company, but it doesn't offer dividends. It doesn't give me that extra safety net. Okay, and I like that extra safety net. Sir, recession coming or not? Roll recession? No, the recession is not coming. Understood. You got that? All right. I'm glad you like it. Now, all that being said, this is James from Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks for weekly cash flow. Take you along for the ride for a safe, predictable, consistent 1% per week using nothing but pre-qualified dividend stocks. Now, pre-qualified dividend stocks are those companies that have consistently increased their dividends for more than 20 consecutive years. 20 consecutive years. Every single year, higher and higher dividends. Okay? You buy it at a certain price, you sell it at a certain price, you make a certain amount of money, and you do the same thing over and over again. Thanks. Have a good night. I'll be dreaming of dividends. Cool beans. Now, I had a couple of questions on YouTube that I missed. Let's see what they were. NVIDIA, very little dividends. I told people to buy September's 188 for 15 times. Okay, cool. I don't like NVIDIA. The reason why I don't like NVIDIA is that premiums are, well, wait a minute, no, not the premiums. The dividends are horrible. Horrible. Anyway, you guys have a great night, and we'll see you again tomorrow. Done. 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 Sir, about golf stock market, grow up, maybe down. Okay, whatever. Done for the night.